Hey, we see. Good morning, everyone, or wherever you are. Good day, everyone. My name is Jeanmonod. I'm the Regional Vice President of Sales here at Angel Oak Mortgage Solutions. We appreciate you guys jumping on the call. We're going to start probably in about 2 minutes. It's just the top of the hour right now. We see a ton of people logging on. We're getting close to 100 people already logging on, so we really appreciate you getting on early. For those of you who have logged on early, there's no prize, but we really appreciate you taking the time to learn on how we can help you guys close more loans in 2021 and beyond. So I see a Wendy's logged on here. Great. A lot of people logging on. We really appreciate you taking the time out of your day. We'll get started here in approximately about a minute and a half. So we really get your questions ready to come in. We've got two great subject matter experts on this call, so they'll be looking forward to answering your questions. And I promise the ones we don't get answered, we will get your account executive to answer those. Bob Kenny, we appreciate you jumping on. Really, a lot of people jumping on still here. So give us another minute. We'll jump on. Hope everyone's doing well today and their March is off to a fantastic start. Most of you loan officers who are logging on right now, I know had a really, really fantastic 2020, and I'm sure you're looking forward to 2021. And obviously taking this time out of your day, we really appreciate how vested you are in your business and wanting to grow it. So we'll get started here in approximately a minute. A lot of people, over 100 people already logged in. We really appreciate it. Just so everyone who is on this, we always get one question we always do get is, will this be recorded? Yes, it will be recorded. So don't worry about taking all the notes. We will send this out to you and usually get it out to you before noon tomorrow. So, and then we'll also get the questions that we don't answer here today. We'll get those answered for you directly by your account executive no later than tomorrow also. So really appreciate it. All right, guys, it's a couple minutes after the hour. It looks like a bunch of people are still logging on. I'll maybe give it another 30 seconds before we get started. I do want to be conscientious of everyone's time here. So give it about another 30 seconds. But hope everyone's having a great day. All right, guys, looks like we're starting to top out here. So again, good afternoon, wherever you are. My name is Jeanmonod. I'm the Regional Vice President of Sales here at Angel Oak Mortgage Solutions. We appreciate you guys taking your time out of your day. We know all you loan officers really had a real tremendous 2020, and we really appreciate you guys taking time out of your day to learn a lot about non-QM. So this is going to be a deep product dive. We're going to spend the next 45 minutes going over products. We've got two subject matter experts here that are going to answer almost all your questions. So what this webinar is not about, it's not about Angel Oak and the 6 securitizations we've done, the 5 since COVID, the $3.3 billion in non-QM business we've closed in 2019. It's not about the 25 enhancements we've done since May 1st, since COVID created a pause in the industry. So it's not about any of those things. It's about programs. So make sure you get your questions loaded in through the box, and we're going to get started here in a minute. I do want to introduce our panelists. We have Denise Maccone. Denise, introduce yourself. Say hello to the audience, please.
Hi, everybody. I'm Denise Maccone. I'm a New Jersey account executive. I've been with Angel Oak for about 2.5 years, and I've been in the industry for over 20 years, maybe 25. I'm not going to try to date myself. But, one of the interesting things is that the role that I took before I took the position at Angel Oak, I was a loan officer. I was a retail loan officer. So basically, I have a complete understanding of everything you deal with on a daily basis. I know the trials and tribulations you go through when you're trying to broker a loan. And I think that that's why I paired so well with Angel Oak, because we're always trying to be better. We're always trying to do better, whether it be product enhancements or great rates, but mostly like our technology platform and trying to really streamline that experience for you guys. And I think that that's, like I said, what makes me a better account executive, because Angel Oak really does try to make it a seamless experience for you.
Yeah. Thank you, Denise. I really appreciate it, and we're lucky to have you on our team. The next panelist, Armando Avilis. I have the pleasure of working with Armando here out of Texas. Yes, a happy belated birthday to Armando. His birthday was yesterday. Armando, please introduce yourself.
Thank you, John. My name is Armando Avilis. I'm an account executive in the Dallas-Fort Worth area. I've been with Angel Oak a little bit over 2.5 years, like Denise, and have a little bit over 10 years experience in non-QM and subprime back in the day. And, one of the things that I really enjoy doing, one of my favorite parts of this job and this role that I have as an account executive is just helping loan officers put loans together, educating loan officers about our products and our process, and really just helping them, close more loans and make more money with non-QM. So, yeah.
Yeah, thanks, Armando. Armando does a really good job. I guess Armando, in fact, he's sitting right next door to me here today. And, we talk about how our top producers own their business. And I can hear Armando on a daily basis walking his brokers and loan officers through the process, whether it's registering a loan, locking a loan, or whatever. He does a really good job, and Denise does the same. They own their business. They know, and what I mean by that, they own the process. So, we've got a couple of pros here, whether, you work with a different AE, I'm sure they're providing you the same professionalism and service throughout the process. So again, I definitely we're going to address all your questions. Please feel free to ask them. We're going to dive deep into products. So I already have one question, what makes a non-QM loan? So there's certain characteristics of what makes a loan a non-QM loan. Like, one of the things that I think people have a misconception is the ability to repay. As a non-QM lender, we still have to abide by the ability to repay. We may use alternative means of income documentation, but we still have to abide by the ability to repay. So restrictions such as term limitations, 30-year terms, we allow interest only, and we can amortize that over 40 years. So points and fees, agency loans are capped at 3%, non-QM is 5%. So those are just some of them. In addition to DTI, most QM agency loans are capped at a 43% debt to income. We allow 40% on the front and 50% on the back. So that's a great question. Keep the questions coming. We're going to dive right into products right now. Hopefully everyone here can see our website. It's a very clean, easy to navigate website. We'll talk about some of these tools and a lot of questions we get. This is, I believe, our 6th deep product dive we've done, and we've done them once a month. And, a lot of questions, we get are, hey, what are your rates? And we'll talk briefly about them, but we're going to show you our quick quote tool. And Denise talked about this earlier, about the technology we have and what separates us from any other non-QM lender. So we'll talk a little bit about that. But really, we're going to just dive into products right here. And we're going to talk about, our most popular program, which is bank statements. But before we talk about bank statements, we do want to ask a poll. So we want to ask everyone who's on this, just take about the next 10 seconds. We're going to do a poll. And the first poll is going to be who has originated or who has not originated a bank statement loan within the last 12 months. So we're going to take the next 10 seconds. Please provide us some feedback and, answer your poll question. And we're going to talk about the opportunity in front of you here. So just take a couple of more minutes here. A couple more seconds. Great. We got some more results coming in. Great. Let's close the poll. This has been consistent with our previous webinars. It's really amazing. And it's kudos to you for all jumping on this call, because there's a huge opportunity. The poll results are in. 80% of you have not originated a bank statement loan within the last 12 months, which is mind-boggling, because this is approximately 60% of our business. So this is really, so keep these questions coming in. We're going to have Denise go over the overview of it, but then the rest of this presentation is really driven by you guys so we can answer your questions. So Denise, take it away, please.
Absolutely. I'm getting opportunity here to what's going to be your most favorite product. I mean, it's a wonderful product. You're going to get so much business, capture so much business that you normally would turn down. The fact that 80% of you on this call have never done one, that's amazing. All right, so let's just get started. The minimum score to get into this program is a 640 score. We are entertaining LTVs up to 90 LTV. Again, none of our programs, just understand, don't have MI on any of our programs. So we will go up to 90 LTV, but in that case, you would need a 700 score. So the minimum loan size for this product is 150,000, but we're entertaining loans up to $3 million. This is a 12 or 24 months business or personal bank statement program. This is for your typical self-employed borrower who's not showing enough income on tax returns, maybe has some losses, maybe the tax returns are way too complicated, maybe owns a lot of different real estate. And this is a perfect program for that. 12 to 24 months bank statements. The only difference between the 24-month program and the 12-month program is about an 1/8 difference in interest rate. So we're giving you a little bit of a better interest rate for giving us a little bit more paperwork. We will, when you look at this, you have a 4-year seasoning of foreclosure, short sale, bankruptcy, and deed in lieu, which is great. Obviously, conventional loans needing a lot more. The rates are based on 30-year fixed rates. The borrowers need to be self-employed for a minimum of 2 years. So just keep in mind, we need 2 years with the same business. And as long as the borrowers own at least 50% of the business, they can use our business bank statement program. If they own less than 50% with a minimum of 25, then you're going to be looking at our personal bank statement program, where you can show that you have a business account, or you can just qualify solely on the personal account. Keep in mind with personal, though, if it is a joint account, we are going to ask that co-borrower be on our loan. We do purchases, cash out, and refinances with this program. We do owner occupied, we do second homes and investment properties here. In addition to the bank statements, we want to make sure that you always submit at least the most recent 12 bank statements. We need the most recent statement at all times. This would be February 2021. This loan is, what we're doing here is just supplementing tax returns for bank statements. So at this point, we also have introduced a 1099 option. So this is for your realtor, your Uber or Lyft driver, or somebody who's getting a 1099, been with the same company for at least 2 years. The 1099 is coming to them personally, not to their company, and would like to qualify off that. And what that does is it saves us some paperwork. We're able to take the 1099 instead of collecting 12 months of bank statements. So we can do either, I'm sorry, John, did you say something?
No, go ahead, Denise, finish it, because we've got a lot of great questions coming in. So I definitely want to get, you and Armando involved in answering some of these questions. And also have Marjorie, we appreciate, she submitted a file right now. So thank you, Marjorie. Hopefully it's one of Armando's or Denise's. If not, we have another great AE out there, obviously doing their job. So, and then Natalia, she hasn't done a bank statement loan. So Natalia will make sure you're going to get in touch with your local account executive who can help you calculate that income, which, Denise, one of the first questions we have here out of the gate, I'll give you a rest a minute here, Denise. Armando, one of the first questions we have out of the gate here is, who's calculating the income for them?
Oh, that's a great question. We actually have a group that's all they do is analyze bank statements. So that's all they do all day, 5 days a week. And, turn time is usually 24, 48 hours. Here recently, we've been getting them back closer to 24. So that eliminates any of the guesswork. We have the income signed off on up front before we issue a quick qual, our pre-qualification form. And, further than that, it's signed off on by the time it goes to underwriting. So it takes any of the guesswork out of that, or any of the stress about, hey, is the income signed off on? We have that tightened up front. So
Yeah, so, one of the things, what Armando just mentioned, and I want to really share the power of that. You're not getting a prequal from an account executive here at Angel Oak without them having the income approved, the credit approved. So one of the things I want to make sure we communicate here, and Denise and Armando will tell you the same thing, is we know how hard it is to get those referral sources. So we're not going to jeopardize any of those. So Julie, Denise, I'm going to throw this back over to you. Julie's asking here, so you just need a 1099 for an example like of a realtor, so no bank statement. So can you clarify that for Julie?
Yeah, so for our 1099 individuals, we will take 2 years of their 1099s, or if you wanted the better interest rate, or we can take the most recent year, and we will take an expense factor off that. And that's kind of what I was getting to with the bank statements as well. We are going to be looking at this income. We're going to be sending it to our bank statement review team. The bank statements will be analyzed. Simultaneously, we are making sure that the loan fits the program. We're analyzing the credit and the application, making sure that this fits the program while we're getting our bank statements reviewed. So the same thing for the 1099 program. We're taking just the 1099 instead of analyzing 12 months of bank statements. But in addition, we will need something with the year to date. Now, most realtors do get an actual pay stub with a year to date, even though there's no taxes taken out. They're getting a 1099 and a commission statement or something with a year to date on it. And that's what we're going to need. So you can either supply that, or you can supply actual bank statements to make up the year to date. So in this case, we would probably need a recent stub, some sort of pay stub commission statement to go along with the 1099. And we will take an expense factor off. When we look at some of these big businesses, we're immediately going to take off an expense factor that kind of fits the business. And we're going to allow the borrowers to also, on some of the smaller businesses, provide us with an accountant's letter or CPA letter, giving us a better understanding of their operating expense ratio. I mean, the guy who runs a digital marketing company out of his home is not going to have the same expenses as a guy with multiple restaurant locations. So we understand that, and we're willing to work with you with that as well. And that's what the 1099 customers are able to do as well. They're going to send us a CPA letter to give us an idea of their expenses.
Yeah, so Julie, hopefully that answers your question. Armando, a question came in here. What's the minimum score to get a 90% LTV?
700 for our bank statement program. Although the minimum score is 700, if you're close to it, 695, right around there. I have gotten exceptions several times to go to 90% with below, a 700 score, which is, I believe really one of the advantages that we have here at Angel Oak is the ability to, be flexible with our guidelines. If the deal makes sense, obviously somebody that's got a 695 score, it's just about there. It's the same borrower. Credit-wise, that's a good borrower. If it makes sense, then we'll do it.
Yeah, so Armando brought up something that I didn't bring up in the introduction, is something that we're not. We are a vertically integrated company. So what does that mean to you? That means, we connect Wall Street and Main Street. We have a hedge fund that purchases all of our loans. So we are making those credit decisions with our capital on the back end. And by that vertical integration, what Armando's referring to is 30% of the loans we close at Angel Oak today don't meet our guidelines. We don't have to go to the end investor and get them to okay it. We do that up front, and we do that at the pre-qual stage. So again, I want to share with you, that's why everyone says, oh, send me your matrices, send me this, send me that. No, we don't want to give you, because we make credit decisions. That's what Armando and Denise do on a daily basis. They know the type of loans that Angel Oak closes, and they know the loans, and we get immediate feedback from our hedge fund based on the performance of our loans. We don't just sell these off and don't know how they perform. We know how they perform on a monthly basis. And guess what? They've been performing extremely well. That's why we've rolled out 25 enhancements since we relaunched after the pause. So yeah, this is, again, 30% of the loans we close don't meet our guidelines. So work with your account executive and get those deals done, just like Armando said. Denise, can you elaborate a little bit more? We have a couple of questions coming in on what is the interest only? Because self-employed borrowers, what do they want? They want cash flow, right?
Absolutely, John. And you got to remember too, we're doing loans up to $3 million here. So, an interest-only term, I mean, it's a 40-year fixed interest only. So what you have here is a 10-year interest-only term, and then it becomes a 30-year fix. So 30-year fixed payment afterward. So that's actually a really big selling point. It's a little bit, it's a quarter added on to the interest rate. But when you're doing a super jumbo loan like this, it's very appealing to these kind of borrowers. And we also implemented, recently we implemented escrow waivers, which is also another big thing. So with 80 LTV or less, a 700 score, we are allowing just for an eighth in interest rate, allowing an escrow waiver on these loans. But yeah, the 40-year fixed is definitely a big selling point.
Your self-employed borrowers are all about cash flow, and as Denise mentioned, we'll do loan amounts up to $3 million. It's not the W-2 borrower buying that luxury home. So Armando, I got a great question here from Luana, and I hope I'm pronunciating your name correctly. How about a borrower who's self-employed but does do W-2 income, or maybe their spouse is W-2? Can you elaborate and help Luana with that question?
Yes, definitely. So if you have a borrower that's self-employed and maybe perhaps the spouse or the co-borrower is W-2, we can definitely use both income sources. We'll get the income analyzed for your self-employed borrower via the bank statements, and we will we'll go off the W-2 or check stub income for the borrower that's W-2. So we can combine those, definitely. And I see that all the time, So that's definitely something that's in our guidelines or something that's in our wheelhouse that we can do.
Yeah, great questions, guys. I know, Denise, you mentioned down to a 640 score. Will a 640 score, what LTV will that get them?
80, but 660 gets you up to 85. So, we need a 700 score on this for 90, but, a 660 gets you up to 85. And again, no MI. So that's another good point.
So, a lot of questions coming in about forbearance. Armando, do you want to just address, what's our policy, even though we just enhanced it, just so everyone on this call can kind of know where we stand on forbearance?
Yeah, and with the bank statement program, we will allow it. They have to have been caught up and make 3 months on-time payments since then. But yeah, that's definitely something that we've recently just adjusted for to include in that program. So.
And Denise, I know we have another question in here. How about a borrower? Wait, hold on. How about a borrower that is both self-employed? We covered that, Dave. A borrower, we can't. Armando, I'll go back to you on this. What if the borrower is W-2 and self-employed? You want to take a shot at that for Dave?
Yeah, definitely. We can definitely do that loan and include both income streams for the DTI calculations. We will analyze the 12 to 24 months bank statements or 1099s. Use that income and then also use the W-2 portion of the income, whether it be for the same borrower or for a co-borrower, slash spouse.
And thank you, Armando. Dennis, I'll answer your question because I don't want Armando and Denise to be the bad guy. So I'll be the bad guy. It can only be, bank statement loans can only be, they can't be done on mixed use property, truly just residential. So just sorry about that. One of the things, we can't be everything to everyone. So Dennis, I'm sorry about that, but it's not Denise's or Armando's fault. Blame it on me, please. No, so Julie's asking, Julie's participating. Great, Julie, hopefully answered. So Julie's asking, is this just business bank statements only? And I know Denise, you answered this a little earlier. Just clarify that for Julie.
So no, we're doing business bank statements. Or we're allowing personal bank statements. And typically what we see with the personal bank statements is somebody who owns less than 50% ownership in a business. So really what we're seeing coming into the personal bank statements is really a true net. So if they have 2 months of business bank statements that they can show us that there's an operating business account, they can supply us with 12 months of their personal account, and we can use 100% of those deposits to qualify them because we know that we're looking at a true net at that point. But yes, 25% business ownership would be mandatory for that program.
Yeah, I know Denise covered this earlier. Guys, get us to 24 months. We'll calculate that income for you. If we decide that we should only use 12, we're going to do that work for you up front, and we're going to tell you why, and we're going to explain it clear enough for you so your borrower knows why. We must have a lot of people who have a lot of realtors as a referral base, because the 1099 is getting, asked here a lot. So what are the ratios? I think you might have answered this already, Denise, and I apologize if I missed it. What are the common expense ratios that we're using for that 1099 program?
Well, typically we see, we get CPA, we can always just default and take 50%, but typically we're getting CPA letters from these individuals that are telling us that their operating expenses are much lower. We're going to default to 30%. So we're never going to use more than 70% of the 1099.
Yeah, so Armando, here's this is a great question. Can you talk about the deposit? What gets removed? What stays in? If you can just give just want to make sure every loan we do is different from the other one. So, so there may be deposits. I'll let Armando talk about it, but go ahead, Armando.
Yeah, definitely, John. So what we're looking for are income generating deposits, meaning that deposits that are a result of a business, the related deposits. Some of the stuff that we'll take out are transfers, are purchase refunds, proceeds from loan disbursements, anything that's not income generating. So.
Yeah, we just want consistent income, even though we are using an alternative means to document someone's income, like bank statements or 1099. We just want consistency. So that's what we're looking for, And if you can help us, document what that may be, one large out of the ordinary one, or a couple or a few during a year, we'll work with you. We'll try. But the thing is, you're not going to get a pre-qual from an account executive without them having ran it by either their manager or a credit expert or the business bank statement review team that we have available to calculate that income for you. Speaking of bank statements, Denise, let's talk about, got a couple questions here regarding NSFs on bank statements.
So that's a really, you got to remember too, we're looking at the overall credit, but we're looking at how they're operating their business. If they're constantly bouncing checks and there's no overdraft protection and there's nothing tied to the account, it does show us a concern that maybe they're operating the business a little sloppy. So we do allow for some NSFs, and we maybe where we've set a limit, it's not set in stone. So we do allow a certain amount of NSFs in the last 12 months, and we allow a certain amount in the last 24 months. But we will look at that individually. Sometimes you do have that freak event where something may have bounced and several NSFs appear within the same day. It's like an overall overview of it. But if you're getting somebody, if you're submitting us bank statements and there's 40 or 50 NSFs within the year, this is probably not the kind of customer that we're going to be looking at.
Mon, I'm going to go back to you. I hope you know this answer. Seller concessions. I think Steve was asking seller concessions. What are we at seller concessions? And Armando, if you can't answer it, I'll go to Denise, and you and I can have a talk after.
Yeah, no, definitely we do allow seller concession 6% towards closing costs and towards closing costs. Yeah.
Yeah, and Steve, that's not capped on the LTV. So Steve, great question. Keep them coming. So just that. All right, guys, we're getting towards the half past the hour. These are a lot of great questions. As I mentioned before at the beginning of the call, if we don't get to your questions, we will get your questions answered. The latest will be by tomorrow by noon. So I apologize, we're not going to get to all of them. We're going to move on to some of our other great programs. We've got Armando now. Armando's going to, let me just move this over here, guys. Got to move a few screens here. Armando's going to talk about our Platinum program. Yes, Armando's going to talk about our Platinum program. So Armando, give us an overview of the Platinum program.
Yes, definitely. Thanks, John. So Platinum program, we can go up to 90% LTV. This is a full doc program. We do have some cool features on here. We have an asset qualifier feature. We also have interest only and a 1-year tax return for self-employed borrowers. Minimum score is 660. 660 gets you 85% loan to value. And like I said, 700 gets you 90%. Max loan amount is $3 million, and over we can go over $2 million. We need a 700 score, and the max LTV is 80%. We can do this for a purchase, refi, or cash out. single-family residence, 2 to 4 units, condos, and townhouses. Front and back ratio requirements are 40-50. Yeah, that's it. It's a great program. Starting to see a lot of this more now, especially with the higher end loan amounts. With this program, doing a $2 million loan at 80% LTV is just as easy doing a $600,000 loan or a $300,000 loan. So this is one of the programs, like I said, that I'm seeing a lot more here recently. A lot more pre-quals coming out for this, especially after the 1-year tax return feature was added.
Thank you, Armando. That's a great add-on there. We see a lot of this business because of that ratios that Armando was talking about, 40 on the front, 50 on the back. So, Denise, any other?
Sorry, John, to interrupt you there. The fact that we can go to 90% with no MI is also big with this program.
Denise, anything else you want to add on Platinum?
Well, I'm going to touch on asset qualifier, so we can do that separately, but that is a part of our Platinum program. So if you want to move on, I can always go back to asset qualifier.
Yeah, we'll jump back to asset qualifier because it is something we're going to break out separately. So so anything else really? This is a full doc loan, as Armando mentioned. One thing I will tease right now. Stay tuned. We are launching a prime jumbo. So stay tuned. That's coming soon. So again, stay in touch with your account executive. If you're not getting our weekly emails, send us your email. We'll make sure you get on our Tuesday. Every Tuesday we do a product feature push to you. So, and again, we've got a lot of people still on this call. One of the things, and I really appreciate you guys, and I really commend you on taking, an interest in keeping your business going. But one of the statistics I wanted to start out at the call with is, the Mortgage Bankers Association, and you probably have seen in the last couple of weeks that rates have gone up. Well, the Mortgage Bankers Association is saying that refis are scheduled to drop 46 or expected to drop 46% in 2021. So, and purchases continue to increase at 9%. So, a lot of what we do is purchase money. You've got to replace that refinance income that you had in 2020. So we can definitely help you, as Armando said, make some more money and, increase your referral sources with non-QM. So questions still coming in, 1-year tax returns. Denise, maybe talk a little bit about that 1-year tax return, even though we just enhanced that feature.
So 1-year tax return, we would require the borrower to supply us with the most recent tax return. So that would be 2020. So that would have to be filed. But yes, we would look back only 1 year, and we would qualify off that with a year to date.
And Armando, last question for Platinum. What's the loan amount where we will require 2 appraisals?
Loan amounts over 1.5 require 2 appraisals.
All right. So John, hopefully we answered that question. We're gonna get guys. We want to keep this moving on because we really do have all of our programs are really good, but we definitely some are more popular than others. So we want to make sure we get to those. So we're going to go to our Portfolio Select, and Denise, I believe you're on board to talk about Portfolio Select.
So Portfolio Select is our other full doc program. So it's a little bit more lenient than our Platinum program. The scores are starting at 620, and we are doing LTVs up to 85% on this. The biggest difference between Platinum and Portfolio Select is that we only require 2 years seasoning for a foreclosure, deed in lieu, or short sale. So that's the biggest difference here. We still allow for, owner-occupied second homes, investment properties, non-warrantable condos, 50% DTIs, and we'll do loans up to $2.5 million here. But yeah, so the seasoning is the biggest difference between that and Platinum. You still get a ability to have an escrow waiver or a 40-year interest only on this, and we still allow for gift funds on this one as well.
Yeah, that's a great point, Denise. Gift funds, we'll allow gift funds on that. So just remember that. I do want to go back. John's asking a question, who pays for that second appraisal? The borrower pays for that second appraisal, just so you know, on loan amounts over 1.5 million. So anything, Armando, anything else to add, Portfolio Select?
No, I mean, I'm seeing this a lot, with borrowers that are 2 years out from a foreclosure or a short sale or a bankruptcy. I'd like to point out that on the bankruptcy on a Chapter 13, we do go off the filing date. So that's come in handy on a couple of deals that I've looked at here recently.
Okay.
And then the non-warrantable condos, aspect of it,
Great point, Armando. Yeah, on all of our programs, non-warrantable condos are allowed. So just, get with your AE to go over the specifics of those. But those are great. I know we're talking about, refis decreasing 46%, but on the flip side of that, our business in usually January, February, and even into March and somewhat April, I know in my previous years of production, 30% of my production during those months were cash out refis. So, look at that Portfolio Select, look at that self-employed borrower, because that some self-employed borrowers are crushing it, dependent upon the industry and they're in. They might, want to take some of that equity out of their house and reinvest it in their business. So, so the question here from George is there a 1-year tax return option for Portfolio Select? Armando, you want to grab that?
Yeah.
There is not.
Okay. Hey guys, we're going to move on because this is probably our second, it is our second most popular program. We're going to talk about our investor cash flow program. But before we do talk about our investor cash flow, we want to do another poll here. So, for those of you that did participate, we had over 70% participation on the last one. So we're really looking forward to participating in this one. So the question is, similar to the bank statement program, how many of you have closed an investor cash flow, or sometimes it's referred to as a debt service coverage loan, in the last 12 months? We'll give about 10 seconds before we let Armando jump into this and give us the highlights, and then we'll answer a lot of questions. We get a lot of questions on this. We want to be really respectful of your time. We've got about 23 minutes left on the call. We will go over. If there's a lot of questions that still need to be answered, we will go over. We just want to be very respectful of your time. Let's look at the polls here. Wow, the opportunity is huge. It's 85%. 85% of you on this call, which I commend you for getting on this call, because Armando and Denise are going to take you through this and tell you how you can close and show you how you can close more investor cash flow programs. So 85% have not. So you're talking almost over 100 people have not closed an ICF. This loan is huge, especially with the Sun Belt and, people moving out people are buying investment properties. So Armando, I'm going to let you take it away with the investor cash flow.
Yeah, thank you, John. This is one of this is behind the bank statement. This is, my other favorite loan that we have. So basically, for investor cash flow, it's for non-owner occupied. We don't look at income or employment. Just wrap your mind around that. We're not looking at employment or income. What we do is the ability to repay component is calculated by what we call the DSCR, the debt service coverage ratio. And that's basically rents divided by PITI. And ideally, we need to be at a 1.0 on that ratio. Minimum score is a 640. 640 gets you 80% LTV. Our max LTV is 80 on a purchase. And again, we can do this purchase, refi, or cash out. There's a couple of cool features about this one as well. First of all, is that we don't care how many total properties your investor has. We're only looking at the subject property. The other cool feature is that we can close in an LLC. The LLC has to have been established for the sole purpose of managing investment properties. Everybody on the LLC has to be on the loan, and there can be 2 people max on the loan. So these do have prepayment penalties, 3-year prepayment penalties that can be bought out in the rate or the cost. This program is not for your fix and flip borrower. This program is for your borrower that wants to establish a portfolio of investment properties or has a portfolio of investment properties. Now, we can do 5 of these at a time with Angel Oak. And I've had borrowers where they've done cash outs on 2 to buy 3 new investment properties. And we get those done at the same time. So really cool product. Like I said, we can do cash outs. Loan amount minimum is 75% LTV. We can go up to 1.5. We can go to, on property types, we can do 1 to 4 unit properties. And yeah, it's a great program. This program is really popular with realtors. And I've had loan officers that tell me that this program has helped them get their foot in the door with the new referral source because it's such a popular product, for your investors.
Yeah, I've got questions popping in here. Joseph's asking, is there a CLTV that we can go up to? Denise, I'll let you answer that. You're going to be the bad person on this.
Yeah, max LTVs are our CLTVs.
Yeah.
So no seconds on those. But I'd like to point out, though, another big point on this one is reserves. We do require reserves on this program, but we only require reserves for our subject property, which is huge because, as we know, reserves on agency loans, can be on every single property that a borrower owns. So that's a huge selling point here. Keep in mind, too, on cash out, we actually allow cash out to satisfy the reserve requirement. So that is also huge. One of the things I want to point out on this one is we do only require 30-day asset seasoning here, but the assets have to be 100% the borrower's own funds. If they want to use business funds, they have to own 100% of that business. But yeah, 30 days asset seasoning on these, and cash out can be used as reserve.
One more thing, John, on here that we do have a feature to where there is no DSCR at 70% LTV and below. So that's and I've seen several of those here recently as well.
Yeah, Armando, while you're on a roll there, what's the minimum loan amount on the investor cash flow program?
It's $75,000. Although loan amounts under $100,000, the max LTV is going to be 65%. So we can go below $100,000 down to 75.
Yeah, and there's a question here, from Natalia. We do not do anything greater than a 4-unit property here. Just, I'll be the bad guy here. And then the next question, Armando, you mentioned LLCs. What about incorporations versus LLCs?
No, LLC, we can close in an LLC, not in a corporation.
Correct. Good. Give an example, Denise, of the ratio, like the 1-to-1 ratio, or
So it's a very simple. It's a simple calculation. The rent must cover the pity payment that you're requiring. If the rent is $1,400, we can give you a pity payment up to $1,400. It's really all it is. And as far as the no debt service coverage, I mean, that's typically for a property that may rent differently in the summertime versus yearly rent that we're using to calculate this. We're using the market rent from the appraiser on these. So what we're doing is we're taking it right from the appraisal, and as long as it works, we're good to go. If for any reason it's a refinance, it has to be tenant occupied, and you have to make sure that if say for instance, the borrower says, well, I'm getting more rent, maybe I let somebody have pets or whatever. Well, as long as they can establish that they are receiving more rent, we'll let them prove that to us. So we will actually take a copy of their lease and 3 months receipt of payments. And if it exceeds the market rent, we'll actually take that if it's reasonable.
So hopefully, Keith, that answers your question. If not, if you want further clarification on that, we can definitely get your local account executive to get you. An investor owns 5 homes, but one or not have a rent. Yeah, we will. As Denise said, anything from a cash out properties have to be occupied. And Keith, thank you for saying yes. It answered. So Denise answered your question. So we appreciate you, Keith. We appreciate everyone. Keith, keep questions coming because again, if we don't have time to answer, here today, your account executive will reach out to you tomorrow and get that question answered, and hopefully spur a great relationship between you and your account executive. So, and as you can see, our account executives here know their stuff, I promise you. So anything else, Armando or Denise, around investor cash flow? We're about 15 minutes. We really want to show, we want Denise to talk about Asset Qualifier. We want Armando to talk about our quick quote tool, and then Denise is going to take us through the great marketing tools that we have available to you, as long as you're an approved broker with Angel Oak. So one last question flying in here. Condotels, we do not do those. So that does not qualify as a non-warrantable in Angel Oak's eyes. You might find another lender out there that might be able to do that. So George, unfortunately, we do not do condotels, but stay tuned. We've had a lot of enhancements to this investor cash flow. I'm telling you, I think most of those 25 enhancements have been solely specifically for bank statement and investor cash flow. And these loans are performing fantastic, and they continue to perform through everything we've all gone through in the last year. So enhancements are still going to come. So again, sign up for that Tuesday email, get in touch, build a relationship with your account executive. Denise, let's take them through the asset qualifier here. So let me move a couple things around here, and let's talk about the asset qualifier, Denise.
So I really love this product. It's actually one of my favorite products, and it's actually the first loan that I ever closed at Angel Oak, which I find funny because I have, a lot of the account executives, maybe don't do as many as I do, but I really love this program. This is a program that's specifically designed for a higher net worth individual. I mean, how many times do you get, that person who's probably got like plenty of money in the bank, but they just don't have that revenue. They don't have that income stream. So this is for a primary residence, this is a no income, no employment loan. So, what we're doing here is we basically are creating a loan based solely on the borrower's assets. So, we are looking for a better credit individual here. We're starting at a 700 score and we're going up to 75 LTV. We'll actually do cash out up to 70. So with a 720 score. So really what it is we're doing loans up to 3 million, and we're starting at a 250 minimum loan size here. And understand that this originally was kind of designed as more of a larger loan in a jumbo product. But yeah, we're starting at a 250 minimum here. And what we're requiring is that the borrower has enough assets to cover the loan amount, 60 months of their revolving debts. That would be their cars and credit cards and everything like that. 60 months of taxes and insurance on the subject property, and 6 months reserves. You do need a minimum of $500,000 in post-closing assets to do this loan. But, we are using 100% of liquid funds. We're using 85% of stocks. We're using up to 80% of non-401k retirement accounts, so somewhere between 70 and 80, depending on the borrower's age. And we are using 50% of the vested balance for 401ks. So this program requires 5 years seasoning of any type of housing event. So it's a little different than our other programs, which are standard at 4, but this one does require 5. There's no traditional DTI here at all. Again, no income, no employment. This is a perfect loan for somebody who maybe changed businesses, or maybe somebody who's recently retired, a CEO or something, and or is relocating. We have the ability to do delayed financing here, where somebody who may, look, right now it's really, when you go in to bid on properties, there's multiple offers coming in. Some people have liquidated some of their investments in order to buy a property. We can actually help them replenish that relatively quickly, so they don't have penalties. So we can do delayed financing here. And that's actually one of the first loans I did, was delayed financing and asset qualifier at the same time. So it is a great loan. Off the matrix, case by case, we will consider a second home here or there. I mean, we're looking at, it's not on our matrix, but with something that we definitely would entertain for the right borrower. And as long as the borrower has the assets and the credit, it's a slam dunk loan.
Yeah, Denise. So that's amazing. And one of your first loans closed was an asset qualifier. Kudos to you. But John's asking a question, and I think Denise has kind of addressed this. There's not anything we will not consider. So just, John's asking about loans over $3 million. Give your account executive a call, John. Like Armando has talked about, Denise has talked about, 30% of the loans we close here at Angel Oak don't meet our guidelines. So that means loan limitations, LTVs, score requirements. So just, reach out to your local account executive. If you don't know who it is, we'll get you in touch with them. But this is a great program. I've heard other account executives, Denise, talk about this. This is for someone maybe who, like you said, just sold their company, or maybe just retired, or unfortunately, maybe someone was divorced within the last 12 to 6 months and got a big payout.
So we are looking at 6 months of seasoning here. So it is important to understand that we're where it used to be even we look back a year. Now we're only looking back 6 months. So we're taking the most recent investment statement and we're looking back 6 months and seeing what the season balances are. Now we don't need every bank statement in between, which is great because we don't want all that paperwork. But that's how we're determining what the assets that we're going to be using for this. Now we can't use business funds here, so we can't use business assets, and we can't use that's just one of the ones that's ineligible. But any personal assets, we're going to do a 6-month look back and be able to qualify off that.
Yeah, and the one question here, and I'll have to check with our marketing department, can we send all the unanswered questions out? I'll see that, but definitely if it's your specific, we will get your question answered. So one other feature, like Denise just said, we've recently changed this from 12 months to 6 months seasoning. Look back on that. And I don't know if Armando covered that or if Denise covered it. If they did, I missed it. Just recently on our investor cash flow program, we just reduced the seasoning on a cash out from 12 months to 6 months too. So just keep that out there. And I really can't stress the importance of signing up for our Tuesday emails and making sure you are getting in touch or visiting our website and staying in touch with your local account executive, because the minute they know of changes, they're calling you guys. So just make sure you know who your account executive is. So guys, these are great. Do we see, and so Scott's paying attention here because he caught Armando's, these are not for your fix and flip borrowers. So Scott, I don't see that happening in the near future. Give us some more runway, and hopefully we'll get close to that, to being able to do that borrower, but not right now, and I don't see it for the near future. So unfortunately, Scott, but thank you. It pains me to say no to some of these questions, but I really, I appreciate your participation, and I appreciate you guys taking the time. We're going to jump back to the website here to show a couple of really cool tools. Woo, say that 10 times, or just have me say that 10 times. But I'm going to have Armando kind of share our quick quote tool. So Armando, make me work here for you here.
Thanks, John. So I spend a majority part of my day here. Anytime I get a call from my loan officers or an email about a scenario, I give them a call, and the first thing out of my mouth is, are you in front of a computer? Because this is where all of our deals start. So this is going to let us know what the LTV is and what the par rate is on any given scenario. So let's run a couple of scenarios. So you got 750 there. Let's do a 760 or above. And let's do 80% loan to value. And then on income documentation, take that from full doc to 12 months business. 24 months business, there you go. Sorry about that. So this is what I typically see scenario-wise when I get a bank statement loan. This is my starting point. It's like par rate is going to be 4.375. You requested 80%, but we can go to 90 in this particular scenario. I also like to point out the housing event seasoning and the reserve requirements. And if you scroll down a little bit more, John, you'll see that we have some notes here that talk about our minimum loan amounts, some just important information in regards to this specific program. And the cool thing is if you run a different scenario, let's say you run an ICF scenario, this will change up and talk to you about the investor cash flow prepayment penalty and such. So
let's do that here, Armando. Hold on.
Yeah.
Let's
go to the SCR at the bottom,
yeah.
and then go to investment on occupancy.
Hold on. Yeah, sometimes you'll get no results. Just make sure you check all your boxes here. So, so this is how, so Armando, talk to them a little bit about like, wow, this is an 80% investor cash flow. I'm telling you to talk about it, and I'm talking about it.
I was going to say the same thing. I was going to say, wow, it's an 80% investor cash flow, and the par rate's at 4.875. When you talk about rates and the features of this program, the fact that we're not looking at income or employment at all, that's a great rate. It really is. Yeah. I mean, we don't, let's say that this borrower's got 15 investment properties, and just imagine doing that with full tax returns. This is just a lot simpler program, a lot less moving parts, and it's easy. I mean, we're doing these, routinely. This is a big portion of my pipeline is the investor cash flow program, and we're ordering on the purchase. We're getting the rent comp analysis. If it's a rate term refi, we're using the lease agreement and 3 months cancel check. So it's a really great program, and I spend a lot of my day talking about it. And when I first started talking to borrowers about it, to loan officers, they look at me like kind of like I'm crazy. Like, what are you talking about? We're not looking at income or employment. And and I say all that to back up the rate. That rate that's a pretty awesome rate considering the type of loan this is.
Yeah, Armando, and the other thing. So Denise, I'm gonna let you talk about. Let's talk about, because a lot of questions we do get, and I do have one question here, is how do loan officers get paid? Because Armando mentioned that this is a par rate. How are they going to get paid?
So depending on how your company signs up with us, we actually have lender paid compensation. So we can actually build some of your comp into the interest rate. We give you probably up to 10 different pricing options, minimum when you do a loan with us. You can have borrower paid options. It's just the way the loan estimate is going to look. You can choose a borrower, like for instance, this is a 4.875 rate. So you can actually choose this rate and charge a broker fee. You also have the ability to increase this interest rate to give the borrower a lender credit toward your broker fee. Or you can also do a lender paid compensation where it's a little more behind the scenes. We're building it into the interest rate, and any type of anything that's billed to the borrower appears as an origination fee from Angel Oak. So you're going to get several different pricing options when you get a pre-qual from us, which I think is great. So it gives you a little more flexibility. But yeah, if you sign up for lender paid comp, we'll always make sure that you receive that lender paid comp, and we can be very creative on the way that we put it out there for you.
Yeah, and I know Armando, I hear him every day, and I'm sure Denise does the same thing. And thank you if you do send us a pre-qual and you get your pre-qual back. Spend 5 minutes going over that. Don't just jump and contact the bar. Spend 5 minutes going over that pre-qual with your account executive. They're going to talk about all the pricing options. They're going to talk about, some of the high level, because they're basically doing a pre-underwrite for you, right? And we're giving you the income from the bank statement. So spend 5 minutes just going over that with your account executive. It can save you, your borrower, and your referral sources so much time and so much wasted energy in the long run. So really take that 5 minutes. Denise, we're going to keep you. You're on a roll right now, so we're gonna talk about marketing. If you have any questions on lender paid comp and on quick quote, we're gonna put it in our question box, and we will get your account executive to reach out to you. So I'm gonna log in here. So that quick quote tool that we were just on, you have access to that 24/7. Right? You don't need login credentials. You do not need anything to use that tool. But to get to the next layer of help here, you do need login credentials. And you can see here, we've got a chat specialist waiting to help you with any of your needs or issues. We have our closing turn times there. But most of all, what we really want to talk about here is the marketing flyers. Because
Right.
we could sit here and tell you about, all the great features and functionality of our program, but another thing that Angel Oak does, we have the best marketing department in the whole wide world, is how you can get more of these borrowers. By the end of 2021, there's projected to be 60 million self-employed borrowers. That's a big, big portion. So we could teach you how to go get those self-employed borrowers. So Denise, I'm going to be quiet and let you go.
Yeah, be quiet.
That's my turn to go.
Right. So, in the beginning, I don't know if everybody was on, but when I introduced myself, one of the things I mentioned is how, Angel Oak, we always try to create a seamless and streamlined experience for the broker. We want to make it easy on you to pitch our products. We're the experts here, and we want to be able to help you feel comfortable that you have a team behind you, but also this marketing portal is fantastic. We have marketing flyers, social media posts, whiteboard videos. Everything is prepared here for you. So it makes marketing our programs just super, super streamlined. You're going in, you're putting your logo, you're putting your cute little picture, you're putting your disclosure, and this is completely prepared for you. You're grabbing some of these social media posts and you're putting it out there to get customers. We do absolutely have the best marketing team in the industry, and we're trying to make it easy on you. So once you get your login, we can easily instruct you of how to go in. And here's a perfect example. You're basically just filling out the left-hand side of the form. You're adding your logo. If you want to add your disclosure, you can do that as well. And there you have a great flyer with all of our products. Now, you may be specifically wanting to market this bank statement program, or you may want to market our 1099 program to your realtors. So at that point, you could pull one individual. But we also have other flyers that have all of our products on there. So you can kind of look like a superstar there too. But everything's prepared for you, ready to go. Very super easy, very, very user-friendly portal. And that's one of the great things that we offer here when you do sign up with us, if you're not already signed on.
Yeah, Denise, also, whenever you customize one of them, when you click back, they will all come up already prepared for you. So it's not like you have to start all over every time. I have several of my loan officers that use these to post on their social media, and have gotten borrowers, as a result of it. We have a pretty cool one that's for CPAs. That yes. I did a search for one of my loan officers for tax preparers and their zip code, and I prepared that flyer, that CPA flyer for them, and just said, hey man, go drop these off at these offices, and he's gotten loans out of it. So it's something that I really like about Angel Oak and our awesome marketing department, that we have these tools, that we provide these tools for you guys to help you get more, to get more of these loans, to sell our loans. So I love these flyers, and usually when I get a new loan officer that I start engaging, that's one of the first things that I do is I'll go in there and prepare one of these for them, just to show them, hey man, put this on your social media and sit back and watch it work, so to speak.
Yeah, hey guys, we are past the top of the hour. I just want to make sure that this is going to be recorded to the end. So I apologize. If you have to jump off, we are going to send out a recorded version of this. So we appreciate a lot of you have stayed on, and I'm glad, because this is really important. So Denise, where do you want me to go next? Want to talk about social media?
Yeah, just at least pull up the social media posts that are there as well. So again, these are all prepared for you. All you got to do is send them out. The flyers are excellent. The detail in these social media posts is great. And, and don't feel like you have to know everything about that program to advertise it or to put it out there. We're the experts. We need you just to get a kind of an idea and a good grasp of the program. Just get us the customers. That's really what we want. We want you to get those customers, and we're right behind you. I've had loan officers call me, right before they had to do a presentation for a realtor, and we've done that, that 15-minute, quick rehearsal, touch on this, touch on that, let me know if you need me, And, really just to get them really comfortable with a program that they can actually just do a presentation. But again, you don't need to be an expert to advertise some of these products. It really is going to set you apart from other loan officers that are not taking the time to learn non-QM.
Yeah, and Denise, I'm going to talk about this last one, the realtor presentation. So you touched on it, Denise, that don't feel like you've got to be an expert. But on the other hand, if you have a realtor office and there are multiple realtors in there, and you're not comfortable doing a presentation on non-QM for them, every AE that works at Angel Oak will do that on your behalf. And they will not say anything about Angel Oak. All they'll say is, hey, I'm Denise's investor, or I'm Tom Jones's investor, and that's it. They don't say anything about Angel Oak. They just say that they're one of your investors, and they'll talk about the scenarios of the loans that they have closed on their behalf and how you can get more business that way. Everyone, Armando and I did one here in North Dallas for a loan officer of his, to about a half a dozen to a dozen realtors, and she was delighted. And we educated that referral source, because I promise you, your realtors are sometimes screening those borrowers. And if they hear a bankruptcy, or I write off everything on my taxes, or I just quit my job but I have a boatload of assets, they're going to say you can't get a loan. If the more you educate your referral source, you will get more business, I promise you. So no more questions coming in. We're a little bit after the top of the hour. Denise, anything in closing that you want to say?
No, I think we've covered products, but I think what's really important is to point out that you got to get moving with non-QM. It's going to be in your future, because if it's not in your future, your referral sources are going to be looking elsewhere for these products. One of the things I hear most often when it comes to non-QM is, well, I don't want to get involved with that. I don't want to, ruin a referral relationship with brokering a loan out. Well, you know what? What do they say? You miss 100% of the shots you don't take. First of all, if you don't take the loan, you're actually giving a warm handoff to somebody else. Because in this market, these borrowers are getting a loan, and it's not going to be from you. So you're introducing your referral partner to another loan officer, and that loan officer actually just saved the day. So I always say, you got to give it a shot. And again, utilize your account executive and the team. We have account managers, that'll work with you. We're going to make this a good experience for you, and you have experts here to back you. So it's time to get involved. It's time to get a good understanding of the products, and hopefully have an even more successful 2021, because we all know that everybody's coming off a really good year.
Yeah, Denise, well said. I won't even say another thing after that. You captured that well. Armando, anything in closing?
Yeah, I would just, follow up with what Denise said in regards to reaching out to your account executive. We're definitely the subject matter experts on non-QM, and the subject matter experts on the programs that we have at Angel Oak. And even if you don't have a non-QM loan right now, I would advise you to reach out to find out who your account executive is, introduce yourself, and start learning, because once you will get one of these loans, you will run across a scenario where you have a borrower that's self-employed, that's written off too much, and now the loan's falling apart, and we're going to need to do bank statements. And if you've had that communication with your account executive, you're one step ahead of the game, and you'll be able to react more on the fly than to sit there and panic and what am I going to do? And and then all that's going to do is cement your referral sources, with your realtors and your builders, the fact that you were able to save that loan. So definitely reach out to your account executive and get educated, get ahead of the game.
Thank you, Armando. Really well said. Denise, Armando, I thank you guys, taking an hour out of your day to educate everyone across the country. That also goes to show you the selflessness of everyone and how everyone here at Angel Oak works together. For everyone that was on the call, and for those of you that registered that are going to get a copy of this, we are going to send a copy. We really appreciate you. For those of you who have closed business with us, thank you for your business. And for those who have not closed loans with us, we look forward to earning your business in the future. So have a wonderful afternoon, and we look forward to working with you. Thank you.
Thank you.
Thank you.